What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on EURUSD, where we had this really nice continuation trade presenting itself using our unicorn model. Also going to introduce you to a new indicator that I found which really helps identify the unicorn model brilliantly. Let's jump into the analysis now and see how all this played out. Let's start our analysis off on the 1 hour time frame, as always looking for our 1 hour swing highs and swing lows. Just on this quick zoomed out view, we can see that we have swept the high at the open of Wednesday and we are pulling back into the weekly range. I am very bearish. We're at the end of the month. We've had a monster pump up essentially all month. It would be unlikely that we would close the month at the very high. We need to put in a bit of a top wick. So I am expecting some pullback just to close the month out. We've put the high in on the open of Wednesday, so traditionally you will find the high or the low of the week will be put in Tuesday. So Tuesday, Wednesday crossover, we put the high in. So this would give me, again, a bearish bias, I think, a pullback, aiming possibly for the low of the week, which is Monday lows down here. So we'll start with our sell side liquidity. Obviously, ultimate goal. Not saying that we'll reach that today, but sell side at the bottom here. We have the New York and the London lows from yesterday. We had the large pump up. Sorry, not from yesterday, from Tuesday. Then yesterday we have a swing low put in New York. And then we've got relative equal highs here between the New York AM session and the New York PM session on the hourly. You see quite tight consolidated price action at the moment. So it wasn't a great New York AM session. We're not leaving 1 hour fair value gaps, or not many anyway. There's no real large displacements at this. There's quite consolidated price action, so we do need to be careful with any trades that we're taking. We do have the Asia high as a potential swing high as well on the 1 hour chart on buy side. And buy side, drop to the 15, take a bit of a closer look at what we've got. On the 15-minute time frame, still got those relative equal highs. The Asia high was put into a bearish fair value gap, so that's interesting to note. We are just sweeping relative equal lows prior to the London window opening. So we have just swept some sell side, so potentially look for a potentially look for a pullback into the range and then a continuation lower, given that we do have a bearish bias overall. 15-minute fair value gap. You'll notice this is actually a balanced price range, so we did have a bullish fair value gap coming up and then a bearish fair value gap coming down. 50% of this fair value gap has been respected perfectly. It means it's quite a strong fair value gap. Possible lower fair value gap. So we've got a large fair value gap in the New York AM session we put in yesterday. Sorry, Tuesday. I keep confusing these two. So we could sweep yesterday's low into a 15-minute fair value gap. So we'll keep that on the charts. Let's drop into the price action now and see what we get offered during the session. So that's my initial setup. I'm using a new indicator. I found this indicator, breaker blocks with signals by Lux Algo. Fantastic. If you want help visualizing where breaker blocks are, this is a bit of a game changer. So we can see here that we had a pump up breakdown. So we did have a breaker block form here with displacement. So this slightly orange, pink shaded area is highlighting a 5-minute breaker block setup. So we'll see how that reacts. I mean, obviously price pulled down, it's come through the breaker block, rebalancing some inefficiencies, and then has broken lower, sweeping some sell side liquidity that we've highlighted there. So we'll see if this breaker block continues to hold or if we trade through. I'm using this breaker block on the 1 minute time frame just to help again make sure I'm visualizing the entries, looking for the unicorn entry Just been testing it out, seems brilliant, so I thought it'd be useful just to mention it to you guys. We'll get a pull up. We do have a bullish breaker at this point, so we have put in, swept a low, put in a lower low, broken through, breaking this high, so it's giving us a bullish breaker here on these up closed candles. I've just realised I'm into the charts 1 hour too early, so our session doesn't start while 2, so we'll ignore this, but you can see how the indicator is working here. It's marked out our low, it's marked out a lower low for us, and then it's highlighted this trade through with a bullish breaker block, and then we manually need to double check that we've got a fair value gap inside that breaker block, which we do here. So this is essentially the unicorn entry for a long position after sweeping the Asia low into the stop hunt hour at 1 AM. Again, I do have a bearish bias. We are sweeping buy side liquidity here, so I wouldn't take this long at this point. I wasn't even at the charts, but let's see how it plays out just out of interest. So the breaker didn't get tapped, the price just ran away. We do come back now. We've swept liquidity into a fair value gap as well. Aggressive move now as London opens back into this breaker. Again, as price has moved so high, if you were taking this as a unicorn, I would not want to take that entry. The displacement appears to be to the downside now, and so having taken low resistance liquidity run higher up and then such a big pullback into that area, it's not an entry that I would look for. I like to get through the breaker, get tapped more or less straight away for a continuation to grab the trend. I do get worried on when price runs away and then pulls back into the breaker like this aggressively. See how that plays out anyway. So it does trade straight through. Sweeping further liquidity to the downside. So on this 5-minute time frame, we can see we've swept the gap time low at this point. The displacement is definitely to the downside. It's given us our breaker block entry again at this point. So we've got a 5-minute setup now where we've taken the highs, put in a higher high, traded through the lower low. This is our breaker block, leaving a fair value gap. So again, let's just monitor this and see how this plays out. This isn't a trade that I took. I do need to point out that we do have red folder news throughout the day. So OPEC meetings throughout the day. We've got Euro news dropping orange folders as well. And then we do have red folder news in the US later on as well. So we'd want 3 PD arrays. If we were going to take this entry on a 5-minute breaker block entry, we would need our breaker block. We have this rather large order block. We've obviously got our fair value gap there. And inversion fair value gaps at that point. So I think a stop loss above there, 8 pip stop loss. And then 1-to-1 takes us into that 1 hour fair value gap. No, 15-minute fair value gap that we highlighted earlier. Let's just see how that plays out. So the breaker block was tapped and respected. So the 5-minute unicorn here straight into the open, 2:30, 2:35. So again, we're at the half-hour open of a candle. And an aggressive move straight through the hourly order block. So that actually worked out perfectly. That indicator showed us the perfect unicorn entry. Sad I missed that really. Let's just analyze this on the 1 minute as well. So nothing there on the 1. Continue on the 5. So we're looking at lower levels of liquidity. There was one great entry. I mean, that's 1.7 filling that fair value gap. It's very bearish price action today, so you could potentially be running this down, as we mentioned, to the sell side liquidity that we've got marked out below us. So we've swept some liquidity at this point. I'm going to drop to the 1 minute time frame. And what I'm doing is I'm looking for a continuation short. So we're back into that 15-minute fair value gap. This now could act as an inversion fair value gap to hold price lower. We are into a macro as well. So we've traded through the fair value gap. It should have been support. It's now acting as resistance. So if we can put in some liquidity and then get a breaker block entry for a continuation lower, following the trend, so following the displacement lower, then this is something that I would be interested in doing. So this is definitely a continuation day for me because I do have a bearish bias. So we've engineered some liquidity at this point. Put in relative equal highs. Obviously put in this low as well, so we've swept that high. If we can break through this range, nice displacement candle there. I'm just going to get rid of this 5-minute. We know that there was a solid entry on the 5-minute, but we trade the 1-minute, so let's just continue looking. And we do break through this, so with relative equal highs, created a higher high, traded through lower low. We can get our breaker block again on here, so this is highlighting the breaker block entry. The last down closed candles before this swing low, so this is the swing low that it's highlighting that led to the high. Breaker block, fair value gap through the breaker block. We've got a large displacement candle, so large engulfing candles at this point as well, so that would be a valid short trade. Stop loss above the high. 6 pip stop loss, that's more like it on our 1-minute time frame. Again, expecting this 15-minute fair value gap to act as resistance. Discount array, so it's showing us on this indicator, this breaker block indicator, discount arrays to potentially target. So 1.9. Obviously, we do have a swing low here as well. See if this gets tagged in. Again, price has run away, so I'd be cautious at this point of a pullback. We sweep that low, I definitely won't take this trade. Yeah, so we swept the low, so there was no entry at that point. No pullback, so we can see very aggressive price action moving lower. So our next level of liquidity, we've just swept this. We've swept the other session low as well, so really bearish price action. So this is one of those days where we don't want to be looking for counter trends. I fall into this trap very often where, well, there will be days like this, and every time we sweep liquidity, I'm trying to look for a reversal. This is just a very bearish day. The trend is your friend. You're better off looking for continuations as opposed to the reversals. We are at the end of the month. We have been bullish all month, so I am expecting a pullback. We're in the last couple of days. In fact, is it the last day of the month now? So I really do expect a pullback. Just so we've got some kind of top wick on the monthly candle. So there's no unicorn model longs here. This is giving us a long position at this point. So we put in a low, put in a high, we put in a lower low. Low, high, lower low. We have then swept it. It's not my unicorn model because we didn't do it in one quick move. We kind of consolidated inside this price leg before breaking higher. What would again have me question taking a long at this point is we are accelerating away quite quickly, so there was no pullback into this area. So I wouldn't take this as a long because it wasn't solid displacement through at the first attempt. It wasn't an aggressive sell-off and then an aggressive buy-up. We had this consolidation, which negates the unicorn entry on my opinion. So there's no pullback into this area anyway. We've already gone high up into the range without pulling back and tapping the breaker block. So I'm definitely more interested in looking for a reversal here to this large fair value gap now. So we have closed through some bearish fair value gaps. We obviously have this mitigation block here, which has caused some reaction into a fair value gap as well. So kind of engineering liquidity at this point. got kind of relative equal highs here, relative equal lows. Swept the high again. Displacement at this point, so we can see the larger candle coming in at 446, 445. So we're at the open of a new 15-minute candle. We're seeing a displacement candle coming in at this point. 1, 2 engulfing candles. We're closing through bullish fair value gaps. Have a bearish bias anyway. We've created relative equal lows at this point, so there is engineered liquidity down here. Close through. So again, open of the new 15-minute candle, we have created our unicorn model. This is valid in my opinion because we had an aggressive move, sweeping liquidity, and then an aggressive sell-off. So aggressive up, aggressive down, as opposed to this aggressive down, consolidation, then a move higher. This is what we're looking for. We're displacing through the breaker block, through the level of liquidity. We've left a fair value gap inside. Because we've missed entries coming down, I manage this in real time by manually entering, expecting a touch of this breaker block. Stop loss just above the high, 7.7 pips. TP1 is going to be taking out the session lows. TP2. We're going to be looking at our next hourly swing low, which is this New York AM session low down here. See how bearish price action has been so far. Sell side. So you'll see this entry that I take is to absolute perfection. The breaker block is here. So it's this last down closed candles are our breaker block. The indicator's just marking the last down closed candle. Personally, I would be marking the entire run down for my actual breaker block. This is our breaker block with our fair value gap inside the breaker block. We want to touch bottom of the breaker block is the entry. We know that these things happen with precision. We didn't get entered up higher, it never pulled back. This is a manual entry. As soon as this bullish candle fails to close inside the breaker block, we had a small rejection. This on my broker moved into this area by a point. This is the exact same pricing on Pepperstone, just into the bottom of the breaker. So I entered manually at this point, stop loss at the top of the high. And there are many times when we do not get triggered in, setting limit orders. I entered manually, it was a perfect reaction. Further consolidation at this point. As it was consolidating at this point, because we did have the breaker block entry, if you remember from here, I moved my stop to break even. Didn't take profits here, didn't want to take 50% of the trade off until we swept these lows here, but I did go break even at this consolidation because we did have the bullish breaker block entry and we were stalling at the top of that breaker block. So this was the bullish breaker. Just deleted it now off the indicator because we do have this one that's valid. But that was the bullish breaker, and you can see we are stalling inside there. So I just went break even in case we did get a pullback. We do get a wick in, so at that point I was pretty convinced we were going to get stopped out and this was going to turn bullish. But we did respect 50% of this bearish fair value gap. Again, 50% of the bearish fair value gap is being respected. Again, a tap of 50% of that fair value gap. And then price eventually does move away. Takes our take profit one. 100% risk free. 50% of the trade is closed there. I'm not going to lose anything anyway. And then the ultimate target is to hold this down to that New York AM session low, which as it stands right now up to real time has just failed to hit. So a risk-free 50% of the trade is closed off. You can see that we do have at this point a bullish breaker setup, fair value gap through the breaker block. I wouldn't be taking this because we're so close to that level of liquidity. But again, the indicator is showing us our breaker block. It is a valid breaker block with a fair value gap through the breaker block as well. So again, game changer is this indicator. Breaker blocks with signals by Lux Algo. Get it on your charts. I found it invaluable this last couple of days. I've been using it, really good. In fact, even testing it onto the lower time frames, 30-second and 15-second charts as well. It seems to work perfectly, so if you're really into your lower time frame scalpings, it would be worthwhile monitoring that one. While editing that, I was hoping that we would have hit the take profit, but as yet we haven't. We can see that obviously we tapped that bullish unicorn model, the bullish breaker, had a small reaction and then ultimately closed through it. This is why I wouldn't be taking every single entry that this indicator throws up at. You still need to have some analysis to know where you are in price action. So we do need to be sweeping liquidity before even entertaining a possible entry on the unicorn model. So this entry is in the middle of nowhere, so wouldn't be a valid entry in my opinion. I want to see a sweep of this low, hoping that we could have swept that before I close out this video. Unfortunately, we're just in this consolidation. So we'll have to see if we do sweep this prior to New York opening up, or indeed if we're going to get some larger scale pullback into the London range. We will see. In any event, I hope you found the analysis useful. I hope you find the indicator useful. Definitely go and check it out. If you liked the video, please leave it a thumbs up. If you've got any questions, leave them in the comments section down below. And likewise, if you're enjoying this kind of content, want to see more videos and analysis like this, consider subscribing. It's great to have you on board. Thanks for watching. I'll see you again in the next video.